Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel. Turn on the notification bell to get notified whenever we upload new content. Okay, so before we get to today's business, I would really want to apologize on behalf of the community, of the YouTube community, for the little short break that we have had away from the YouTube. Okay, it's been long we upload the content, and I would really like to apologize for that. Okay, so I do hope I am forgiven. Okay, but I'm sure and I promise that we have tons of content on this channel that, as a new trader that is new to ICT concepts, that is new to smart money concepts, we have lots of videos on this channel that's going to help you out. Okay, that's going to get you on your feet, that's going to get you started on how to trade smart money concepts. Okay, so if this is the first video you are ever coming across on this channel, please do well to check the previous videos, check our previous series. We have tons and tons of videos on this channel that's going to help you. Okay, so with that said, let's get down to today's business. Okay, and I'm doing this video as a request to a student from our Telegram community who requested for how I frame my setup on the 1 minute time frame. Okay, so I just thought I should kind of make it advanced. I should advance it in a general way. Okay, so in order to answer the question, I'm just going to generalize the concept. Okay, I'm going to make it for everybody. I'm not only answering the question alone. Okay, I'm making this video for everyone, and I do hope it helps us out. Okay, I do hope we find some insight from the video. Okay, so always remember, Telegram group link is always attached to the description box of this of every video. Okay, so if you want to join our Telegram group link, you want to join our Telegram group, kindly check on the description box and you will see the group link there. You will find it there. Okay, so click on the group link to join our community on Telegram. Okay, so now in today's episode we're going to be looking at how to frame a trade setup made easy series. Okay, so we're going to be looking at how to frame a trade setup easily. Okay, so it's more like I made it easy, and trust me, it's not really easy, but I guess breaking it down into smaller pieces should help us to be able to frame our trade setups. Okay, so we're going to looking at the two major setups that forms every week, week in, week out. So whether you believe it or not, as a trader, I want you to know this one thing from today henceforth. Okay, there's two major setups that form on the trade on the market every week. Okay, there are two major setups that forms every week in the market. Okay, so we should not, so knowing this should help us as a trader to not feel rushed. Okay, we should not feel rushed on wanting to force an entry or a setup. Okay, so I am making this video to tell us that, to kind of advise us on the need of feeling left out. Okay, when we see others posting setups, we feel that we are left out, and I'm not really seeing any setup today, and those kind of thoughts will eventually lead a trader to kind of force an entry. Okay, but I want you to know from today so that there are two major setups that forms every week on every pair, on each pairs that have liquidity, that have movement in it. There are two major setups that forms every week. Okay, these two major setups forms every week, so there's no need to form a setup, there's no need to force an entry. Okay, you can capitalize on these two setups and you are done for the week. Okay, you don't need to trade every trading day, you don't need to trade every day of the week. Okay, you can, if you can just capitalize on these two major setups, it will help a lot. Okay, so sorry for making the intro a little bit too long. I just wanted to be clear on it. Okay, so let's get down to today's business. Now this is, I'm going to be looking at this, we are going to be looking at the dollar index. Okay, we're going to be looking at the dollar index, and of course this works on all the asset class. Okay, this works on futures markets, which is index. This work on forex, this works on crypto. Okay, so the next video I'm going to make on how to frame the setup is going to be on crypto. Okay, we're going to be looking at the crypto market. Okay, so to show to us that it works on crypto market as well. Okay, so now I developed a trading plan which is actually a work in progress, and I shared it on the Telegram group. Okay, I shared it on the Telegram group, and you can actually join the group and you will see it. I pinned it on the Telegram group. Okay, so this concept is actually, kind of something I drew out from, I took out from my trading plan. Okay, so I decided this is just like a short insight on my trading plan. Okay, what I do every day, every week. Okay, so I just wanted to share with us a little insight of it. Okay, so now what's the buyers, the two type of trade setups that forms every week is the buyers directional setups and the counter trade setups. Okay, so there's always a setups that forms in the direction of your buyers. Okay, and there's always a counter trade setups that forms um uh, that forms against your bias. Okay, so that those are the two major setups that forms every week that I was making reference to in the introduction of these videos. Okay, so now what I want you to do with the daily time frame, this is where the writing, you have to do some you have to take some notes. Okay, so now what I want you to do with the daily time frame is to determine your directional bias. Okay, so what you do with it, this is daily time frame, of course. Okay, so you have to determine your daily bias. Okay, you have to determine your directional bias. Then the next thing I want you to do with the daily time frame is you have to determine your market condition and you have to determine your market environment. Okay, so these three things are very, very important. Okay, in other words, if you are right on your bias but you are wrong on your market condition and your market environment, you might read price action wrong. Okay, so what do I mean by these three terms? What is my bias and what is my market condition and my market environment? Okay, so now looking at this price action from a hindsight. Okay, I want you to tell me, this is the market currently bullish or bearish? Okay, I just want you to pause the video for like a second or 10 seconds. Okay, and answer the question before you play it. Okay, is the market currently bullish or bearish? Okay, so I'm going to answer that because I've already made the video quite too long. Okay, I don't want it to be too long. So the market right now is very, very much bullish. Okay, why am I saying the market is bullish? Why am I saying the market is bullish? Now if you take a look at this price action, looking at, we had a low, a high, right? We had a higher low, then we had a kind of a higher low. Okay, once again a second higher low was formed, but that price did not create a higher high, right? So it created a higher high from this short-term low. Okay, then we had this right here is a retracement. Okay, so this would have been a shift in market structure if we had a short-term high formed right here. Okay, this would have been a shift in market structure, but this is, to me, this is not a shift in market structure because this is not a valid short-term high. Okay, you can see, although we had a high, we had a candle that is high, a higher high, but this other candle traded above is higher than the middle one's high. Okay, so this is not a valid swing high. Okay, so this right here is a valid swing high. Okay, so this right here is a break of structure. Okay, so this is a break of structure, so my bias is bullish. Okay, but the market condition right now is retracement. Okay, so I'm having a bullish bias and a bearish market condition in the form of retracement. Okay, so although I'm bearish right now on the DSY, although I'm expecting lower prices, and but I know that I'm currently bullish. Okay, my bias is bullish but my market condition is bearish, which is a retracement. So we had an expansion and retracement, right? So now and the market condition is, although is trending, okay, prior to the week close, or as at on Monday. This is Friday, Thursday, Wednesday, Tuesday, Monday. Okay, as at Monday it was kind of stuck in this consolidation. Okay, but the week has already closed, okay, so it looks like it's trending right now. But on Monday, as at when I was and like looking at the market on a Monday, it was more like consolidating. Even on the Tuesday, okay, it looks like it's stuck in this consolidation, okay. So as at on Tuesday, the market environment was consolidating, okay, but my market condition was retracement, okay. So I already seen a now we are in the retracement, okay. So now where do you think the market is being drawn to? Where's the level that the market is being drawn to? Okay, prior to on Friday, okay, we had this fair value gap, right? So this was where my market is being drawn to. This was where price is being drawn to, the fair value gap right here, okay. So what I want you to do with the daily time frame is that I want you to determine your directional bias. My directional bias is, of course, I'm having a bullish trend, okay. The overall bias is the overall trend is bullish, okay, but my market condition is retracement, so I'm having a bearish bias in a bullish trend, okay. So you can see both offers different bias, okay. So right now, although I'm bullish, but my market condition is on retracement, okay, so that gives me a bearish bias, okay. So if you can differentiate between your bias and your market condition, that will be of help, okay. And at the same time, identify your drawn liquidity, okay. Where is the level, where is price being drawn to from where you are currently, okay. That's another one. That's something you should as well consider, okay. I failed to add it to it, okay. So I'm looking at four things on the daily time frame, okay. I'm looking at my trend, which is I'm looking at order flow, okay. Is it bearish or bullish, okay. My order flow is bullish, okay. So you check that on your trading plan, okay. You check that what is my order flow, is the order flow bullish or bearish, okay. Obviously bullish, okay. So you check that. Then what is my market, what is my drawn liquidity, where is from where I am currently, or sorry, what is the market condition, what is the market condition right now. The market condition is that, are we currently expanding or are we retracing, okay. So you can tell the difference between when a market is expanding and a market is in the retracement phase, right. A new bid, that's one of the basic skills we develop as new traders, right. We tend to know when the market is retracing and when the market is expanding, okay. So in this case, we had the market that expanded up, retrace, expanded up, and right now the market condition is telling me that we are in a retracement phase, okay. So now if the market is retracing, it is reaching for one of two things. That is your drawn liquidity, okay. So once you can answer the question on your market condition, the next question you should answer, you should have check out on your trading plan is, where is the market being drawn to, okay. The retracement that we are currently in right now, where is it being drawn to, okay. So remember we talked about price being reaching for one of two things. Price is either being drawn to to a fair value gap, or liquidity, which is an old low or an old high, okay. So price is being drawn to either a liquidity or a fair value gap, or an imbalance, which is a fair value gap, okay. So obviously the retracement we are having on the DSY right now, we are in the market condition. Our market condition is retracement, right. We check that out. Then the next question that follows the market condition that should be on your trading plan, okay, is where is your drawn liquidity, okay. So I was expecting price to be drawn into this daily fair value gap right here, okay. So now then, once you have your drawn liquidity, check out the level, you write it out, okay. You write it on your trading plan, okay. So what's the level of this fair value gap? That will be or in other words, the upper level of the fair value gap and the lower level of the fair value gap. So you write those levels out, okay. So I'm expecting price, and you target on your trading plan, I'm expecting price to be drawn to this fair value gap at so level, okay, between 106 106.00 and 105.00, okay. I'm just using a random example here, okay. So that will be your drawn liquidity. And then the next thing that you should check off on your trading plan will be, what is your market environment, okay. So in other words, is the market trending, or is it stuck in a consolidation? Is it consolidating, or is it trending? We have two types of market environment, okay. We have the trending and the consolidating market environment. So obviously prior to Thursday, Wednesday, Friday, prior to this week's transaction, the market was currently stuck in a kind of consolidation, okay. So on Tuesday, So this is on Friday, Thursday, Wednesday, Tuesday, Monday of this week's transaction. Okay, so as of on Monday, the market was still in the consolidation. So when I put up this chart on a Tuesday, I stated in my trading plan that the market was still consolidating. Okay, but it was making a kind of an attempt to leave that consolidation. Okay, so you have to know your market environment. Okay, so these are the 4 questions you have to answer. The first thing you do, or rather what you do with your daily time frame. Okay, so these are the 4 questions you have to answer on your trading plan. Okay, so let's see how that looks like. Okay, so this is what I was talking about. Okay, so my bias or sorry, my order flow. Okay, you can just write it order flow in order to differentiate between them. Okay, in order to differentiate between them. So my order flow is currently bullish and my market condition is retracement, giving me a bearish bias. Okay, so now once I understand that my market condition is bearish, right? So where is the market being drawn to? What's my draw on liquidity, followed by the draw on liquidity, right? So where is price being drawn to? Price is always reaching for one of two things, reaching for either an imbalance or a or liquidity. Okay, so in this case we had an imbalance right here. Okay, so price is reaching for this. Okay, so this was the level I was expecting price to be drawn to. Okay, giving me a bearish DSY. Okay, so that answers the questions. And the next one is is it currently trending or is it consolidating? Okay, so prior to on Wednesday the market was kind of in a consolidation. So I hope we have understood that clearly. Okay, so let's go to the next time frame. This is the 1 hour time frame. Okay, so these are all the level from the daily time frame refined on the 1 hour time frame. Okay, so we have this, we have a run on liquidity, right? We have price drop down and we have that fair value gap. Okay, so now the next thing I want you to look at right now is that on what I want you to do with the 1 hour time frame. Okay, so from the daily time frame, the next time frame we'll go to is the 1 hour time frame. So we are doing this from a top down analysis approach. Okay, we are using a top down analysis. We are working from the top to the lower time frame. Okay, so now what I want you to take note of on the 1 hour time frame is every displacement in the direction of your bias. And why is that? Okay, so now in the direction of your bias, okay, after determining your bias, what your drawn liquidity on the higher time frame, what I want you to take note of is every displacement. Okay, so we are all familiar with the concept of displacement, right? So this right here is displacement and this right here is displacement. Okay, but I want your attention to be primarily focused on the displacement that expands in the direction of your bias. In other words, I'm expecting a bearish DSY, a bearish dollar index into this daily time frame. Okay, so I'm only interested in the displacement that goes in that bias. Okay, so in other words, I'm not interested in this displacement. Okay, so I want you to take note of every displacement that goes in the direction of your intended bias. Okay, that is what I want you to do. So why is that? Now this is because I want you to see every displacement from an algorithmic perspective as an expansion. Okay, so now whenever you see we have a displacement, okay, in this manner, I want you to view this as an expansion. I want you to approach this using the algorithm an algorithmic perspective. Okay, this right here is an expansion. Okay, so using the interbank price delivery algorithm, that will be viewed as consolidation, expansion, retracement and reversal. Okay, so I have not done any markup on the 1 hour time frame. Okay, so this right here delineates this week. Okay, so this right here delineates this week. So this is on Monday's midnight New York opening. Okay, so let's do some annotations on the 1 hour time frame. Now we have the midnight opening on Mondays. Okay, so this is the midnight opening price drawn out in time. Okay, so now what is our bias? We are expecting a bearish week on the DSY. Okay, so how would that look like using the power of 3? Okay, so what we are actually expecting, if this is our opening, we are expecting an expansion to the upside. Okay, a Judas swing, which will be open, high, low and close, right? So we have the open, the high, the low and the close. Okay, so this is the power of 3 applied on a weekly time window. Okay, so this right here, I didn't have this markup in my chart. Okay, I was not looking at this, but I just wanted to add it as an addition on this video. Okay, so now in other words, we have the week opening right here. So this will be viewed as the Judas week, right? So now what do we say if we are or in other words, if we are expecting bearish price, we are expecting lower prices, what should we expect from price? Okay, we should expect some run on buy side liquidity, right? We should expect some run on buy side liquidity above the opening price. Okay, so now I'm bringing the concept of how we apply the power of 3 on a daily perspective, on a daily basis, but in this example, in this case, I'm looking at it from a weekly perspective. In other words, for in the based on the 2022 mentorship, the opening price of every trading day, if this was on Monday's trade, let's assume this was on Monday's transaction. Okay, let's assume this whole, or sorry, on Tuesday transactions. Okay, so let's assume this whole price action right there is a single day transaction. Okay, I'm just making an assumption here. Okay, so the right thing to do on, if we are expecting lower prices, is that we will mark out our 12 o'clock midnight opening price, right? So we'll mark out our 12 midnight opening price. Then if we are expecting lower prices, in other words, we should see some run on buy side liquidity, right? We should see some run above an old high. Okay, and if this was a futures market, that would be the first high prior to 8:30 opening price, right? So this will be viewed as the first high prior to 8:30 opening. So this will be 8:30 opening, and this will be the run on buy side liquidity, right? So it's the same concept. Okay, but I'm looking at it from a weekly perspective. In other words, you remember, always remember that price is fractal, right? Whatever happens on the higher time frame will happen on tends to repeat itself on the lower time frame. Okay, so if we are expecting is a particular a kind of particular price action, or a kind of how am I going to put it? If we are expecting something like let's say a run on liquidity or a displacement on the higher time frame, we can we can refine that to the lower time frame and look for that exact same thing. Okay, so now the applying the power of 3 on a weekly perspective, on a weekly time frame. Okay, from the weekly perspective, in other words, this will be on Monday's opening price, right? So if I'm expecting lower prices, I should see some run on buy side liquidity. Okay, so I should expect some Judas swing, right? So now as you can see, price expands, creating that Judas swing, and we have our run on liquidity, our run on buy side liquidity. Okay, so this will be viewed as, this is short-term premium, right? This is above the opening price. Remember, we said in our applying this to the daily time frame, the daily on the daily time frame. Okay, from the on a day-to-day how am I going to put it, on the daily time frame, right? If this was a daily time frame, our high probability setup for a sell scenario will be above the opening price. Okay, so now if we apply that to the weekly time frame as well, our high probability setup for a sell scenario will be above the opening price on Monday opening price. Okay, I don't know if you are getting the point of what I'm trying to say. Okay, so in other words, this will be our 8:30 opening if we are looking at the futures market. Okay, this will be our 8:30, and this will be our first high prior to 8:30 opening price, and this will be our run on buy side liquidity above our opening price, our 12 a.m. midnight opening price of whatever day we are trading in. Okay, if this was on Wednesday, this will be our midnight opening price, and our run on buy side liquidity will be this, and the displacement. Okay, so now back to today's teaching. Okay, I'll just try to make an example to ensure we understand what I'm trying to say. Okay, so now we'll talk about two setups that forms every week, right? So the first one I'm going to be looking at is the setups that forms in our directional bias. Okay, so this is how we look at it. So now we'll take note on the 1 hour time frame. After checking out all our conditions on all our daily time frame, our buyers, our order flow, market condition, and the rest. After identify those levels, okay, after identify those levels, now we'll come down to the 1 hour time frame, and you can decide to use this approach, or your attention could be immediately drawn to those to displacement that goes in the direction of your bias, okay, of your intended bias. Okay, if we were bullish, this would have been the displacement that I would have been interested in, but my bias is bearish. Okay, so now you can see on Monday I didn't have much to trade with. On Tuesday there was nothing much to trade with. Okay, but on Wednesday we had this displacement, right here. Okay, so now you mark that fair value gap out in time. Okay, so now approaching this from using the interbank price delivery algorithm, this will be viewed as consolidation, expansion. Okay, remember, whenever price is consolidating, the next phase we're expecting to go into is expansion, right? So we have the expansion. So now once we see an expansion, the next phase we're expecting to go into is either reversal or retracement. Okay, so now we have the expansion, reversal, and we had another expansion. So we had a reversal and an expansion once more, and now once we are, as you can see, having this expansion, the next phase we expect it to likely go into is retracement, right? So now what I want you to take note of on every displacement from the 1 hour time frame is that you should view it as, once you have a displacement, you should view that as an expansion. So you always expect a retracement back to that fair value gap or back to that imbalance, right? So once price gets trades into this 1 hour imbalance, fair value gap, okay, so always take your displacement on from the 1 hour time frame. Okay, so your attention should be on every displacement that goes in the direction of your bias on the from the 1 hour time frame. Okay, so now I had nothing to do on this pair. Okay, if I was trading this asset class, I don't normally take trades on DSY, but I use it as a benchmark. Okay, I use it as a benchmark for directional, for confirmation, for more confluence and the rest. Okay, so but if I was to trade this pair, okay, there was nothing for me to do prior to this displacement. Okay, until I see this kind of displacement, this displacement right here, that is when we have something to do. I will have to start planning my trade. Okay, now once we had this displacement, we should be expecting a retracement into that. Okay, so that is what you take note of on the 1 hour time frame. Okay, so now let's drop down to the next time frame, which is going to be the 15-minute time frame. Okay, so like I said, we are going to look at framing the setup for our buyers and counter trade setup framework. Okay, but first let's look at our buyers framework. Okay, so now this is the 15-minute time frame. Okay, so and this is that 1 hour fair value gap right here. Okay, as you can see, we had a run on buy side liquidity, we had displacement, which is expansion, so we are expecting retracement and more expansion into the into that daily fair value gap. Okay, into that daily fair value gap, which is our expected drawn liquidity, right? So I forgot to mention that we had this we had a fair value gap refined inside of that daily fair value gap. Okay, so this is a 1 hour fair value gap refined from inside of the daily fair value gap. Okay, so now we're expecting price to be drawn to that. Okay, so now when we had this, immediately you have price trade into your 1 hour time frame. Okay, so what I want you to do with the 15-minute time frame is to look for a shift in market structure after price has traded into your 1 hour draw on liquidity level, which will be this. Okay, so once we have that displacement on the 1 hour time frame and we wait for price to trade into it as it's immediately trades into that 1 hour fair value gap on this candle, okay, you go down to your 15-minute time frame. Okay, if there is no significant for a shift in market structure, okay, but if there is no significant low taken out on the 15-minute chart, okay, but there is a displacement, as you can see right here. Okay, this is the 15-minute chart, right? But as you can see, if we were to expect a shift in market structure, then we have to definitely see this low taken out right here, and that would make us to probably have missed the whole move. Okay, we would have missed the whole move, although we can still take an entry when price came back and still give a little movement, but that would be a kind of too late movement, and price would have already reached for the drawn liquidity where I was expecting price to be drawn to, right? So what do we do if we are faced with this kind of situation? Okay, if there is no significant low taken out on the 15-minute chart, okay, but there is a displacement That is probably because the low is not visible on the 15-minute time frame. Okay, so what you want to do is kindly drop down to the 5-minute time frame for more data. Okay, so now in this case we saw a a displacement, but there was no significant low taken out right here on the 15-minute time frame. So what you have to do, you have to drop that to the 5-minute time frame. Okay, so now this is that 5-minute time frame. This is 5-minute time frame. Okay, so we had the shift in market structure. Now you can see clearly the shift in market structure we had. Okay, so this was the low that took out this short-term high, and we had another low, higher low, that took out another short-term high. Okay, so now this is where it gets tricky. Okay, I'm getting to the part of answering the question on what I do with my 1-minute time frame on entries. Okay, so now to some traders, this right here would have been an entry. Okay, so this would have been the shift in market structure right there, and this would have been a display a fair value gap. Okay, so to some traders this would have been a valid entry. Okay, I could have entered on this if I was trading this, but I would not have taken this. Okay, I would want to see something more, a kind of displacement like this. Okay, so I would want to see price show the willingness of wanting to move away once we are into that 1 hour fair value gap. Okay, so this is that 1 hour fair value gap. This is the low end and this is the high end. Okay, so now I want to see something like this as a displacement. Okay, so but to some traders this is enough for an entry. Okay, so someone right out there trading smart money concept would have already taken an entry right here. Okay, as soon as we had this low taken out. Okay, because this was the most recent low that that took out the short-term high, this short-term high, or this. Okay, so this to some trader is a valid break of shift in market structure. Okay, so different traders have different approach. Okay, but I'm going to share mine with you, how I how I approach mine. Although I don't there's are some situations, there are some times where I had to do the other, I have to take different approach to my entry. Okay, but I'm going to share one with us right now. Okay, so now as soon as price trades into this fair value gap, I'll go to my lower time frame. Okay, to other traders this is just an entry. Okay, what they do, as soon as price trades into this fair value gap, they place their sell entry and their their stop loss is above this candle or above this candle. Okay, and that is still a valid entry. Okay, but I'm teaching us top down analysis approach. Okay, so now let's go down to as soon as price trades into that fair value gap, let's go down to our 1-minute time frame and look for an entry. Okay, so this is how I do my entry, does my entry on the 1-minute time frame. Okay, so now you can see we had a short-term low right here that took out this high. Okay, so now for my shift in market structure, I will have to wait until this low is taken out. Okay, why is that? I have to wait until this low is taken out, but as you can see we had this displacement and we had this entry. Okay, but that is not, I'm not interested in this. Okay, I'm only interested in the market until this short-term low right here, which broke this high, is taken out. Okay, so right here you can see the market, the low was taken out right here. So this is when I had my shift in market structure. Okay, other traders will have definitely be in right here, others would have been in right here. Okay, but for me, on my top down analysis approach on the 1-minute time frame, I would like to see this shift in market structure right here, and this would have been my entry. So I would have been my entry would have been this right here, and my stop loss above this short-term high. Okay, so now my target, obviously you could target two levels. Okay, you can target the high of that daily fair value gap, or you can target the far end of the refined 1 hour fair value gap inside of the inside of the daily fair value gap. Okay, so I will prefer the 1 hour refined fair value gap, okay, as a target. Okay, so as you can see we had a risk reward ratio of 9:1. Okay, almost 10. We have a 9.9 risk reward ratio. Okay, so that is how we you frame a setup that is going your way. In other words, that is heading to in your intended direction, in your intended bias. Okay, so now we're going to look at how do we frame a counter trend setup. How do we frame a counter trend setup? Okay, so now your counter trend setup starts with a shift in market structure on the 15 minutes or 5 minutes time frame. Okay, after you have identified your 1 hour draw on liquidity, which is displacement price level. Okay, so remember, notice how I'm giving you all this approach with certain rules that to guide you. Okay, so these rules must not be bent. Okay, these rules must not be bent. Okay, for you to see the to gain most out of this lesson. Okay, you must not try and bend the rules. Okay, you must not try and bend the rules. Okay, so now if to have a counter trade setup, that will look something like this. Okay, once I have identified my drawn liquidity, okay, in other words, once I have seen my displacement on the 1 hour time frame, okay, I'll drop down to and draw it out. Okay, draw that level out. So this is the level, this is my 1 hour drawn liquidity. So I'm expecting price to reach into that to for an entry to go short. Okay, so now I'm going to take a counter trade setup. Anticipating price to reach into that level. Okay, so this right here is enough target for me. Okay, if I can get an entry, so the idea is to get an entry, it is to take a long entry into that fair value gap, into that 1 hour draw on liquidity level. Okay, so but before you do that, you have to be sure, you have to you must have identified your 1 hour draw on liquidity. Okay, so if there's no displacement on the 1 hour time frames, there's no level that of interest for you that you viewed as a possible draw on liquidity, then there's never going to be a counter trade setup. Okay, so the counter trade setup starts from the 15-minute time frame. Okay, 15-minute or 5-minute time frame. Okay, so it starts with a shift in market structure. Okay, so how does that look like? Okay, now obviously we have the 15-minute time frame. Okay, so this is my 1 hour displacement level, right? I'm expecting price to reach into that level in order for me to look for shorts and take a short entry down to that 1 hour fair value gap, right? So now I'll be expecting a shift in market structure, in other words, to indicate that price is making an attempt to reach for that level. So I'm going to take a short-term counter trade setup in the form of a bullish bias. Okay, in form of long entry. Okay, so now this will be a 15-minute shift in market structure. Okay, once we add that shift in market structure and we see a displacement which will be in form of this fair value gap. Okay, so once we have that fair value gap, you drop down, I'll drop down to my 1 minute time frame. Okay, so now this is my 1 minute time frame and this is that 15-minute fair value gap. So now as you can see, price was just dropping and this would be my shift in market structure. Okay, and this would have been my entry, but as you can see, I got stopped out. Okay, got stopped out right here. Okay, so now once I got stopped out and once I get stopped out right there, you can see price immediately immediately expanded and shifted instruction once again. Okay, but there was no entry offered right here, but we had another displacement and my new entry would be right here. Okay, so that is why it's very, very important to apply risk management. Okay, even though you are a smart money trader, you have to apply proper risk management. Okay, so this would have been my entry and my stop loss would have been below this bearish, which is the order block, below this candle, which will act as an order block. Okay, so where will be my target? Okay, where should be my target? So my target is probably the low end of that fair value gap. Okay, so I'm expecting price to be drawn into that level in order for me to look for shorts. Okay, so I'm going to look for a long entry into that fair value gap. Okay, so if I was expecting price to drop into a fair value gap to go up, what I will do is that I will look for a counter trade setup, a short entry into that fair value gap in order to go up. Okay, so that is how you take your counter trade setup, and as you can see, we had a risk reward ratio of 5:1. Okay, so what the takeaway of this lesson is that I want you actually sharing to you what you should be doing with the different time frame. Okay, kind of showing you right now a top-down analysis approach. Okay, what's the specific things you want to do with each time frame? Okay, so for the daily time frame, like I said earlier, this is just a recap. Okay, let's do a short recap before we wrap it up. Okay, so for the daily time frame, you want to identify your order flow. Is it bullish or bearish? Okay, you want to identify your market condition. Are we currently in a retracement? Are we retracing or are we expanding? Okay, then you will look for your draw on liquidity. Okay, if we are retracing, we are currently, that means we are being drawn to one of two things: an imbalance or be in form of liquidity. Okay, so in this case we are drawing down to an imbalance. Okay, so I'm not actually saying that price will start going up from here. Okay, but what I'm actually saying is that this is my bias. This will be my bias until price gets to that particular level. This is my bias. Okay, so I will stick with that bias. I will be bearish until price gets to this particular level. That is just what we are saying right here. Okay, so I'm not really kind of expecting price to start moving fast, to just reverse from there. Okay, there are going to be other factors that are going to come together to show to me that price is want to resume, is going up, that price wants to resume is the primary trade, which is bullish. Okay, so but prior to this would be my bias. Okay, so that is how one way to determine your bias. Remember, we are not trying to pick tops at bottom. Okay, you should avoid picking tops at bottom. You should avoid making routes for the marketplace. Okay, there are going to be times the market is going to fall below your expectation. They are not going to do what you expected it to do. It's going to do a different thing entirely. Okay, so we should always be open to new possibilities. Okay, so that would be that. Okay, so the next thing you want to have on your trading plan is your market environment. Are we expanding or are we consolidating? Okay, so like I made mention earlier, prior to on Wednesday trading, price was kind of stuck in this consolidation. Okay, so now once you have these levels identified, this is my drawn liquidity and I'm expecting price to be drawn into this. Okay, you can refine those level, then you refine those level to the 1 hour time frame. Okay, so that will look like this. Okay, so that will look like this. Now on the 1 hour time frame, I want you to take note of every displacement that is in the direction of your bias, that is going towards the direction of your bias. Okay, so if your bias is bearish, or if your bias is bearish, you can then if you want, okay, if you wish, you can on Mondays you can take the Monday's opening price, okay, and draw it out. Okay, if you are bearish, once price trades above the opening price, you should look for a kind of short-term high to run, to be taken out. Okay, which is, we should look for a run on buy side liquidity, and when that happens, you can be expecting a kind of displacement. So that is one way of making it easier for you. Okay, making it easy for yourself. Okay, so now what I want you to take note of on the 1 hour time frame is every displacement in the direction of your origin, in the direction of your bias. Okay, so in other words, you are not interested in this displacement. Okay, you're only interested in the one that goes in the direction of your intended bias. Okay, so once you have those levels marked out, until you see that displacement, you are not doing anything. Okay, you are just waiting and watching price to give you that displacement. Okay, so now once we have that displacement, you can then mark out the levels. Okay, so if you are bearish, you can, like I said, you can take out your Monday's opening price. Okay, so once price trades above that and run a buy side liquidity, creating that displacement, then you are set, and you can start anticipating price, you can start planning your trade. Okay, so now once the price trades into that 1 hour point of interest, which is the uh, displacement. Okay, which once price trades into that level, you go to the lower time frame, your 15-minute time frame. Okay, your 15-minute time frame, and you look for a shift in market structure. Okay, if there's no significant low taken out but there's a displacement, that's probably because the level is not being shown on the 15-minute time frame. Right, you drop to your 5-minute charts, and as you can see, we had the level right here. So once price trades into that, you go down even further to your 1-minute time frame. Okay, like I said, this is just enough for some traders to take an entry. They can place a sell, you can place a sell right here, and have your stop loss above that. Okay, so but the reason of going down even down to the lower time frame is it helps you to refine your stop loss, it lowers your risk and increase your risk to reward ratio. Okay, so that is just that, and I do hope we have enjoyed this. I'm sorry for making this video too long. It was never my intention, but I just wanted to clear. I just wanted to make sure that we are all on the same page. Okay, so I'm going to make more series on the trading framework, how to frame a setup. Okay, how to frame a setup. I'm going to make the next video is going to be on crypto markets. Okay, we're looking at the crypto assets. Okay, so until next time, do have a great weekend, and I will see you guys next time. Bye for now.